Hello guys, it's Max here from Daily Market Movements, and in front of me we have one of my favorite trades of the week. It's the gold over the US dollar chart. As you can see in yesterday's trading session, we touched my first take profit up at 17.50. We had Jerome Powell come out and speak after the Fed minutes statement. So he spoke during the conference, and what a dovish conference it was indeed. I think it caught many investors by surprise. A lot of investors were anticipating Jerome Powell to be very stubborn with regards to the economic boom and not really going to not paying it too much attention at all. That's his job, okay? His job is to not cause too much volatility in the markets, and he did a very good job of doing that. But he actually went one step further, okay? The dot chart, that was probably the most important thing that came out in yesterday's statement, showed that the majority majority of the members in the Fed don't see a hike until after 2023. Now, traders were expecting a hike going into the end of 2023, but the majority have come out and said that they don't see the Fed hiking interest rates until after 2023, which is fantastic. Jerome Powell basically come out and he made it very clear that he doesn't care about forecast economic data. He wants to see actual economic data, and he named 3 factors that he wants to see before interest rates can start to be hiked again. Okay, so he wants to see the inflation above 2% and holding steady above 2%, because he does say that inflation at the moment is very high, but he thinks it's only temporary and it will fall again. He also wants to see the unemployment number become lower. At the moment it's roughly at around 6%, but he wants to see it back to pre-pandemic levels. So very bullish for the gold markets. Low interest rates is very good for gold, and that's why we saw that spike, and we touched a session high up at 17.54 yesterday. So well done to all my YouTube viewers who managed to capitalize on that trade. I've been telling you for some time now to buy gold down at 1700 and to aim towards 1750. Now I do still have one gold position left. That's with a take profit up at 1800. I actually added a second gold position today during the dip down at 1720. I got a perfect buy entry at the session lows, and I'm already trading in profit, and that take profit is up at 1750 once again. So I'm aiming towards 1750 on the position that I opened during today's session. But my previous buy that I had down at 1700, I am still targeting that 1800 price target, and I do believe we will get there over the next week or so. I'm bullish for gold. Yesterday with Jerome Powell coming out and saying what he said, that still tells me that the fundamentals are looking very strong for gold, and I do believe we will see some more upside movements over the short term. One reason as to why the gold markets are trading in the red during today's session, and this has taken a lot of traders by surprise, is that we've got the 10-year yields rising yet again. But that being said, the 10-year yields have now reached an area between the 1.7 candle all the way up towards the 2.0 candle, where we have seen some resistance in previous months trading. So I don't really anticipate the 10-year yields to move above 2%. In fact, I would just like the 10-year yields to get to 2%, let's say next week, so it can just get over and done with, and then that's when we can really focus on the markets starting to recover from their recent losses. But yeah, in terms of a 10-year bond note, the 10-year bond yield, I don't anticipate for it to rise much more than what it has done. So that should be seen as a positive for gold and the stock market. So I'm a buyer here of the gold market. So I'm targeting towards 1750 first of all, and then back again towards 1800, which is currently sitting at the above the 50 and below the 200-day EMA. So it's actually in between the two. But I'm very bullish here because the fundamentals are strong. Technicals are looking much better as well. I'm a buyer, no interest in selling.
you.